Hello there and welcome to the MCS pre-scene analysis videos by Ashranti on the latest sitting at the MCS level on Alpaca Hotel Group. So the first thing we're going to talk about very briefly is exactly what to expect from this pre-scene and also what we're actually going to cover and how we're going to go about it and what the sort of overall expertise of the staff members involved are going to cover. So with that said, we're going to take a quick detour to that description now, and then I will see you just after to get stuck right in. So I've welcomed you briefly to the current sitting for the pre-scene analysis for the MCS, but first let's discuss what exactly is the MCS pre-scene analysis. Well, first and foremost, it is undertaken by myself and some other colleagues, and in the video series particularly it is me as the MCS expert, and I've been doing this for a number of years now, going through I think over 20 sittings at least at the time of this recording, but at this time there's definitely more that will be coming because this will be pre-recorded. But with that said, I also write mocks for Ashranti for the MCS. I also do a bit of tutoring. If you email in about the MCS, it's typically me responding and help you out with your query. And I also write large sections of the study text for Ashranti. I particularly write on the MCS and F3 at the strategic level. So that's a little bit about me. But what exactly are we doing with the pre-scene? Well, first and foremost, the video series aims to go through section by section. We're going to talk about the key points. We're going to talk about the industry guidance and how that might relate to the company. So what we do know from the industry, we try to relate to the pre-scene, though typically in recent years we have had an increasing amount of industry information given inside the pre-scene as well. So sometimes that can overlap a little bit. We also go through the business models and what might be appropriate for the business or where they're situating themselves in terms of Ansoff's generic strategies, for example, and that kind of stuff. The biggest focus for sure is the likely exam issues. We try to marry the key points and then discuss what the likely exam issues would be based on that. Following on from this, we talk about exam hints and tips at times where appropriate, and that is more and more appropriate as we go through the different sections such as the strategic analysis and the top 10. We put a few more sort of direct focuses on the theory and how to write and stuff like that. And you can always email in and ask certain tips and hints if you're worried about how you write the actual exam as a technique, for example. But there's also a number of products like the MCS study text and the MCS video series that covers the exam technique in much more depth. We also go through a strategic analysis, as I alluded to before. We go through the top 10 issues as well. Essentially, these are applying the models in the strategic analysis to the pre-scene and how we can best relate the pre-scene to the sort of standard models that business analysis utilizes. And of course, the top 10 issues that we think are most likely, that's not a guarantee, but most likely to come up in the variants. Now you have to remember, there's lots of different variants. So in the top 10, you may have some that come up in yours and some will come up in a different variant taken by a student in a different location. So you have to bear in mind that the top 10 is not all going to come up in your variant, but across all of them, they are likely to have a very strong representation. So how does it work? How do we go about this? Well, we're going to go through section by section and we're going to assume no prior knowledge. So typically I record these videos without actually reading the pages. I have a quick look at the structure to determine what video will have what sections in it, but I don't actually look at it incredibly closely until we're going through it in the video. And then from that point it's about determining what we can reasonably expect from the pages or the information given rather, because it's very easy to overanalyze, and if we overanalyze it's not going to represent what the examiner thinks we might be doing, or rather is more feasible for the pre-scene. So with that in mind, we're going in with no prior knowledge and we're going to talk about as much as possible that's relevant. We're going to read a section and we're going to make notes in an ideal world. So what we want to do to make the most efficient revision possible and study possible for you is we'll make notes on the screen, and of course we do recommend that you do also. And this is to ensure that you can compare and contrast your notes and come up with essentially what might be a better overall image, because two heads are always better than one. We'll talk about my review and what I think about the pre-scene. And at the end, we're going to go through the different business models, as I suggested, through the strategic analysis, and then we'll talk about the Tom 10 issues in their entirety and what we think, or what I think, will most likely come up in the pre-scene. So the first thing we have to remember is that the pre-scene aims to give context to the exam. It's not foolproof. There'll be lots of curveballs that can come up. Something you think is a dead certainty in the pre-scene may actually come to light in the unseen material that's given in your exam, is no longer true or doesn't really apply anymore. Do not pre-write anything based on the pre-scene. I cannot stress this enough. It's not the quintessential document for everything that could possibly come up. The whole point is to give you background information and an overall understanding of where the business is at and some potential issues, and then they will give you new information alongside the questions, so that could very much change your answer. So do not pre-write, just have a good idea in your mind and make sure you're very confident in what challenges are faced and what opportunities there are, etc. And as I mentioned, it is overall just a background to deal with the unseen issues that are. And notably, you do have access to the pre-scene on the day of the exam, though it is recommended you're very confident on the material inside already. You can flick through to double check things, so don't stress out too much on that as well. Your recommendations have to be consistent with analysis. So you can't analyze it in such a way that determines that perhaps debt finance isn't a good option, for example, and then recommend debt finance. It has to be consistent. Make sure you make recommendations where appropriate, but only if they're consistent with your analysis. Otherwise, it's very confusing. And with that said, I will take you back to the present me that is now going to go through the current case study sitting with you. So thank you very much for understanding how this product works, and I'll see you in the video. Okay, so with that said, our first video is going to cover the introduction and a chunk of the hotel industry section, which is quite long, so half of it will be in video 2. So let's get stuck in straight away. And what we like to discuss at first is that these little introduction pages are actually exceptionally important, because we often say that the overall pre-scene, the total pre-scene document, is the context for your exam, the unseen material. However, this introduction page is actually the context for our pre-scene. So it has a lot of vital information clustered in a very small amount of words. So we're going to go through that very quickly. Now, so the first thing we see is that Alpaca is a group. So first thing straight away, group accounting is going to be very, very important. We've got an IFRS that dominates this and governs this overall procedure and how we account for a group. So this is almost, well, it's going to be in the overall mix of possible topics to come up, because we have a specific outline that this is a group company and they will have group accounts. It is also quoted. So this means that the company is listed on the stock exchange and therefore has access to revenues, to avenues of equity finance such as rights issues, but cannot benefit from an initial public offering. So with that in mind, we do have to at least acknowledge the different abilities of the company to generate extra equity. It also means that we're going to have a larger amount of information that is public because of the typical stock market regulations that are going to be present that govern the local stock market that they're listed on, and therefore there will be a number of competitive advantages that may be sort of public or discernible by competitors. So there is that little bit of a window into operations by rival companies. So in terms of benchmarking and understanding how we compete, etc., that may be relevant further down the line. But the most important thing, of course, is how we finance our projects, and being quoted means we cannot do an IPO because we're already listed, but we do have access to a rights issue and similar instruments. Following on from this, we see that it operates and owns 50 luxury hotels. Now, the first thing I do want to point out is that it owns them. And it is quite a specific word. It means that we're going to have that large amount of assets, which means we can have security for debt finance. So already we can see that this group, barring any debt covenants or any issues in regards to their overall finances, will have a good access to both equity options via, say, a rights issue, and also they will have access to debt because they have a large amount of securitization for the loans in the form of these hotels. Also, I want to point out the word luxury. This means that in terms of our generic strategies, our Ansof's matrix, for example, we're going to be thinking about where we're positioned in the market, and luxury hotel suggests that we're going for that premium market. We're making sure that we are a quality leader rather than a cost leader. We are also told that they are all based in the country of Mainlandia. So all of the hotels are going to be in the domestic market. So we're not going to be subject to the various exchange risks such as translation and transaction risk in the form of those rates moving in between, for example, between settlement and agreement. So we don't have that risk involved as far as we know right now, because it seems clear that all 50 hotels are in Mainlandia specifically. Alpaca's head office is located in the capital city, which means that we're typically going to be able to get staff quite easily. In the terms of the capital city is likely to have the most educated and a very mobile, large workforce available. So in that sense, we will not have too many issues geographically or externally regarding recruitment. It would only be a case of a more internal issue if we were to struggle with recruitment and staffing. We are also told that Mainlandia is a developed country with a very high standard of living with a thriving economy. Now, this is the examiner essentially saying, or ruling out rather, the issue of our strategy being ill-fitting to our market. So they're saying essentially that the domestic market is very much equipped to accommodate this kind of strategy. You can go for a luxury strategy, or a luxury hotel strategy rather, if you have these very wealthy or affluent populations that are in the local market. However, if you were to try a luxury hotel model in a very, very poor region, you're typically going to do not so great. So in this case, the examiner is very clearly highlighting the fact that our strategy meets the market capabilities or capacity, and as such, we won't have too much pressure in the sense of not having the right amount of demographics to actually fulfill our 50 hotels. Anything regarding low attendance numbers or something like that with the hotels is probably going to arise from a different issue, maybe a public relations issue or something like that. It's not going to be because the people can't afford it. It would be something very different. And also it means that if they have a thriving economy, we will expect growth. Shareholders, remember we're quoted, shareholders will expect growth. And also, if we're doing poorly in a thriving economy, this means that there is some serious issues, of course, something to do with maybe cost control, but we don't know that much so far. We'll see that later on when we see the accounts. However, just keep in mind that this sort of very prosperous nation with a thriving economy does have very key impacts in terms of what we can and shouldn't really suggest based on what we can see, because it is a very, very pertinent fact. So with that said, we can now move on to the next bit. And in the next section, we are told that Mainlandia's currency is the M dollar. Now, usually I point out that this means that we could be subject to exchange rate risk, because if we're dealing with, say, dollars with a US hotel, we would have our own currency, which means that there could be exchange rate issues such as translation, where you have a difference between the accepted deal and then the settlement of that deal, where the exchange rate changes and one party loses money based on that change. So in this case, it's just highlighting the fact that Mainlandia has that currency, and if they were to expand into a different market, we would have to consider exchange rate risk. So this is the examiner saying, essentially, we don't have exchange rate risk, but if we did branch out, we'd have to consider it. So when we're thinking about, say, the overall pros and cons to expanding to a new market, I mean, having 50 luxury hotels in one country sounds quite a lot. It sounds like there may be a saturation point, perhaps. So if we do ever look elsewhere, we do have to consider this exchange rate risk because we have our own currency in our domestic market. And this is quite standard. It just is a clarification by the examiner that the IFRS standards are the sort of accorded to framework for accountants in this market. So because it's a made up kind of country, obviously they're just restating that IFRS applies. This is literally just a bog standard. Keep IFRS in mind for anything regarding what we're going to do. Essentially a disclaimer. So just keep that in mind. There's never going to be any doubt. It's always IFRS. So when we think about group accounts, we're going to be following IFRS as always. Finally, in this last paragraph, we are told that we report to Liz Petrov, who is a senior financial manager, and she reports to Zoe Diaz, the finance director. So sometimes we get a hint about the depth or the sort of scope of what the exam may ask, because sometimes we're told in the MCS that we are going to be reporting directly to the finance director, and this sometimes puts a slight emphasis on some factors, such as the more financial factors. Sometimes they suggest that there's a longer chain of command, like we have here. Also, sometimes it suggests that we also cover, HR and stuff like that. So in this case, we're being specified that we have two superiors, and we're typically going to be focused on a very sort of management accounting aspect. Sometimes it does branch out in some MCSs, and in this case, we are told that you are often asked to gather information on other matters for your superiors. So in that case, it's not ruling out the potential for a more strategic question, but this sort of two-step hierarchy where you've got your manager and then the director, this suggests that there will be less strategic elements. You'll be more focused on essentially the core topics of management accounting rather than those topics that you get, such as equity finance, like rights issues and stuff. That slightly strategic elements, they are probably going to be less prominent in this particular exam because of the way they've worded this. Sometimes it's not like this, and that means that there might be more scope for those kind of broader strategic-ish questions. But in this case, we're told core fundamentals of management accounting, and perhaps we'll get a little bit of something else. So in that case, very, very standard, nothing to sort of fear in terms of how broad the questions will be. And with that said, we can move on to the next page now. I hope you enjoyed that free sample of our material at Astranti, and I would just like to take a moment to walk you through what else we do in terms of both the case study and just generally across all of our modules. So first and foremost, we have study text for both the case study and each and every module for CIMA, and this is essentially going to focus on, for the MCS at least, the theory that might be coming up, what could be used, a bit of a revision crash course, and also the exam technique that we recommend for passing the exam. We obviously have the course videos as well, which cover that study text in great detail in terms of walking you through it in a video presentation as opposed to written study text. And as you will know probably, we have the pre-scene analysis and industry analysis, which are predicated on each and every sitting that comes up for the case study. We also do mock exams. Now these are one of the most popular products, particularly with marking and feedback, because they offer a more real-world feedback session with a qualified marker that will give you feedback on where you're going wrong, what can be improved, what you're doing well, and stuff like that for the different mock exams. And we have a great expertise across the team in developing very accurate and well-crafted mock exams for the case study, and that's something that is very, very popular. Finally, we also have the masterclasses. Now, these are sort of like a video format revision cram, where you've got everything that you could possibly need for the pre-scene in one condensed lecture over a number of hours. I believe it is 2 to 3 hours typically, with a lunch break, and essentially we've got this very, very long and comprehensive class where you can ask questions, you can view the lecture, and just absorb all the information that you may need. It assumes zero prior knowledge, so it's very useful if you're feeling behind especially. But of course, very helpful as well, just to be at this sort of complete preparedness you can be. And just before I leave you, I would like to point out that we have a pass guarantee, and this is essentially where, as long as you fill out a few forms that show us that you have undertaken our material and unfortunately failed, we will allow for you to have the next case sitting free of charge for the case study, because of the fact that you have bought the complete pack and you have unfortunately not passed. As long as you've utilised that, we're confident enough in our materials that we are happy to give you a guarantee, a free use of the next case studies materials, because we think you'll pass with our materials without shadow of a doubt. So thank you very much for listening to this quick ad, and I hope you use us in the future.